Hi guys, a very good morning to everyone who's tuned in live to this broadcast on Moneycontrol. You're watching Opening Bell with me, Stacy Pereira. And let me quickly give you a recap of where we've left off. Of course, the mood on Dalal Street seems quite upbeat. Yesterday, we saw both the benchmarks hit fresh record highs. Nifty 50 moving closer to that psychological 23,000 mark and, gaining almost 1.5% in trade, 1.64 to be precise for the Nifty. The Sensex also above that 75,000 levels we saw in intraday trade. But what is also really striking is how now the Bank Nifty has made this U-turn, and perhaps it is for the Bank Nifty to now go on to outperform even the Nifty. Well, yesterday the Nifty was clearly the the outlier, the striker, we would say. But the Bank Nifty not moving too far, 900 odd points, 2% up, and we saw the heavyweights really pushing the indices further. So is this momentum really sustainable? That's what we're going to be talking about. And of course, let's not forget, please keep sending us your queries on our live feed so that we can take them up with our experts. And of course, there is the Sensex rebalancing that saw most of Adani Group stocks really ticket higher yesterday. We're going to be discussing all that with our experts, but before that, let me take you through all the top headlines. Dow falls over 600 points in its worst day this year as the rate jitters offset the enthusiasm around Nvidia's blockbuster earnings. Treasury yields have climbed on a positive economic as well as labor data. The dollar index climbed to about 105. And markets in the Asia-Pacific region have opened on the back foot following that weak handover from Wall Street. Inflation in Japan eases to 2.5% in April. The GIFT Nifty year, though, is implying a weak start for the Indian markets after that record close that we saw yesterday's session. Oil prices have fallen for the fourth straight session, with Brent hovering around levels of $81 a barrel. Gold, on the other hand, the prices are down to one-week lows, dragged by that hawkish Fed as well as the US economic data that was out. India's largest airline, Indigo, has recorded 6 straight quarters of profitability. Revenue from operations has grown to over 17,800 crores, whereas margins too have risen on a healthy 24.8%. The airline has also announced its foray into the business class on select routes by the end of this year. Hindalco and NTPC will be the two important index names reporting their fourth quarter earnings today. From the broader markets, expect numbers from Ashok Leyland, United Spirits, Manappuram Finance will also be in focus. All of 11 minutes there on the clock for opening bell, and that remains to be seen whether the Nifty actually wants to take us higher towards that 23,000 levels, or perhaps we are going to see some bit of consolidation or short covering, because that was pretty much what kept the markets alive yesterday, taking us to those new highs. But let me also quickly take you through some of those FNOQs that you can be watching out for. Remember, if you look at the weekly options data, it was the maximum call open interest that was seen in that 23,000 strike, and it has been for all of this week rather. In fact, the put side, we did see a new number there. 22,800 strike is the one that owned the maximum open interest there, which can also act as that support level now for the Nifty. In terms of the PCR, or the put call ratio, where we did see that one rising to about 1.37 on May 23rd, that was yesterday, versus the 1.20 levels that it was in the previous session. In terms of fund flows, now this is quite interesting because we did see FIIs become net buyers a day before yesterday. Then there was some bit of selling that came in, and of course yesterday again FIIs turned into net buyers, and yes, they've bought somewhere around 4,670.95 crore worth of equity shares on May 23rd. So now that's quite a big number that we're seeing FIIs flocking in, and it was pretty much those big index names, the heavyweights, that saw a lot of buying. In terms of DIIs, they too were net buyers, but they bought somewhere around 146.5 crore rupees worth of shares, according to the provisional data that has been put out. Now, the VIX index, that is quite interesting, and we are going to be talking about even Jefferies' Greed and Fear report and what they have said, and where it all really, where the scales are really turning and tilting towards. And the volatility index for now, in fact, has cooled down further, but still remains above that 21 mark. The experts seem that this could be elevated at least till we have the Lok Sabha election results out of the way on June 4th. Now, the VIX, in fact, was down by 0.41%, coming at 21.38 versus the 21.47 that it was. So barely some basis points there, but that downtrend is there for the second consecutive session, we could say. Now, for your F&O ban and stocks that are going to be in that list, NSE has gone on to retain, and there are 11 of them, in fact, in this F&O ban list. Aditya Birla Capital continues there, Balrampur Chini, Bandhan Bank, Hindustan Copper, India Energy Exchange or IEX, India Cement, Metropolis Healthcare, Nalco again continues there, Piramal Enterprise, PNB as well as Z Entertainment are the ones that continue to be in that F&O list, whereas NSE has removed Biocon as well as Vodafone Idea, and both of these have some interesting news points that are coming in as well for both of these counters. Biocon, we are given to understand they've tied up with some, they have a new drug that will be out soon. Vodafone Idea, a couple of positive brokerage notes that have come out on this counter. So we are going to see some activity in terms of both of these stocks that are out of the F&O ban. And for the earnings that you need to be watching out for, NTPC and Hindalco are among the bigger names that will be, in focus today. You also have Ashok Leyland, Hindustan Copper, Glenmark Pharma, Suzlon Energy, interestingly, even Torrent Pharma that will be putting out its Q4 numbers. So let's, of course, we'll be talking about these stocks in focus, but let's now just shift focus a little bit towards just the index and how the Nifty managed to hit that all-time high and hover around those 22,900 levels. So 23,000 seeming quite near, at least perhaps maybe an intraday trade today is where we could see that going. Let's talk about the levels that one needs to be looking out for, and for that joining me is Aamar Deo Singh. He's the Senior Vice President at Angel One. Good morning, Aamar. Always good to have you with us here at Moneycontrol. Now let's talk about the index first. But also the kind of inflows that are coming in. Now, we did see that big FII buying in the cash market as well as short covering in the futures, one could say. What are the levels that one needs to be tracking in today's session, particularly at least for the Nifty first, and then we'll come back to the Bank Nifty and how that one has performed. But give us your view, at least what the charts are really saying for the Nifty. Are we likely to see some bit of a pause or breather as well? Is that something that could be expected?
Yeah, very good morning, and thank you for having me on the show. So, yeah, yesterday I would say was a stellar performance by Nifty and Bank Nifty, and also most of the heavyweights we witnessed some really sharp move. So, if you look at Nifty, it's very much striking distance to the 23,000 mark, and also the best part is what we are seeing is that despite the Dow correcting significantly and it's witnessing its largest fall in 2024. The starting for Nifty isn't that bad. So that really reflects, but we'll have to watch out for the first 15 minutes how the markets really play out. Having said that, what we saw yesterday was that across the expiry, so be it the May expiry, the June expiry or the July expiry for Nifty future series, we've seen some significant OI built up. So in excess of 5%. So and with the price rise. So that is, that's definitely a positive sign. And also, we've been maintaining that overall the trend remains positive. But yes, because India VIX has also moved up significantly, so that that could be a cause of concern. But we have there was one point which I made was that the US CBOE VIX isn't really increasing. So from that perspective, it says that ours is more related to the election results. So that's where the volatility factor comes in. Having said that, overall the trend remains positive. What we see is that somewhere around 22,600, 700, now that should act as an immediate zone of support for Nifty. On the upside, I would say since Nifty has breached a crucial zone of resistance, which was earlier around 22,800 levels. So there is a possibility that Nifty sustaining above the current levels, it could rally towards 23,100, 150 in the short span of time. But at these levels, one definitely needs to be slightly cautious.
Right, so be cautious at these levels. Now let's compare the Nifty versus the Bank Nifty. Of course, yesterday we did see both of them, quite strong there. The Bank Nifty also gaining close to 900 odd points, 2% gains there. And we saw one of those components like something on the likes of HDFC Bank actually start participating. Now it could be these new FIIs inflows, you could say, or the likes, but within the Bank Nifty now, what is really the strategy there? Are we likely to see those 49,000 levels once again, or do you think that it is now time for the Bank Nifty to actually be that outperformer?
So if you look at Bank Nifty has been an underperformer when we compare it with Nifty, because Nifty hitting record highs, but Bank Nifty is still far off from its record highs, which it had witnessed on 30th of April. That was almost 50,000 levels. So it's slightly, it's comparatively below that level. But because if you look at Bank Nifty, the constituents, like for example, Axis Bank is on a tear. If you look at ICICI Bank, again, remains positive. HDFC Bank, we are seeing now some signs of positive momentum. So for I would say any major rally in Bank Nifty or Bank Nifty hitting record highs, HDFC needs to trade above the 1530, 1550 mark. That's a very crucial, very important zone. And also what we are seeing is that HDFC seems to have formed a bottom. Looking at the other, I would say, constituents, Kotak Mahindra Bank again is witnessing some pullback, but whether it's able to sustain, that's something we need to watch out. And in the public, I would say in the PSU banking space, SBI continues to remain strong and firm, trading at record highs. But it's showing some signs of fatigue. So we'll have to watch out whether it's able to breach above the 850 mark or not. But overall, I would say a mixed trend in Bank Nifty with a positive bias, but still underperforming the Nifty.
Right. Aamar, do stay with us. Let's also address a couple of other stocks that are going to be in focus. One of that will be ITC. Now, this after the FMCG and cigarette maker has reported a net profit on a YOY basis, which was down by just about 1.3%, coming in at 5,020.2 crore rupees. Revenues were up just slightly at 1.1% at 16,579.3 crore. EBITDA was down by 0.8%, whereas the margins were at 37.2% versus the 37.9%. Now, the FMCG EBIT, though, is down by about 5%, and margins too are down by 115 basis points, or 9% on a YOY basis, which might be a worry. Although brokerages don't seem too worried. In fact, the board has also gone on to give a final dividend of 7.5 rupees per share for all of FY24. Stakeholders are also going to be meeting the shareholders, in fact, are going to be meeting for that demerger news with the hotel business on June 6th. So mark your calendars for that, because that's going to be an important meeting to see what the strategy they use for this whole demerger plan. And in fact, the cigarette volumes now have surprised, rather, at least sources are saying that it would have come somewhere around 2 to 3% versus the 0 to 1% that we were talking about. Of course, brokerages have come out with positive notes after this Q4 numbers. Goldman Sachs is maintaining a buy call with a target price of 480. They say the Q4 marginally lower than estimates, because you did see them trade just rather flat or inline numbers, but they see a steady recovery, at least in the cigarettes business. They do see a weak trend though in the paper business, whereas FMCG seems to be an underlying business with healthy EBIT right now, because we saw that 5% growth in terms of the FMCG business. In Investec too has maintained a buy call. They've hiked the price to about 504 from the 499 that it was. And they do see a positive FY24 exit for the cigarette business at least, and they're expecting the earnings growth to improve in the coming quarters. They say that it could provide somewhere close to a high single-digit earning trajectory. At the modest valuations, they are also increasing their FY25 estimate and FY26 estimate earnings by 1 to 2%. Well, that was ITC, and let me quickly, before we just hit that, we have barely, 20 seconds to see how markets also give that thumbs up or thumbs down to ITC. It's going to be quite interesting to see what the markets, because this has been one stock that has, one would call it a meme stock really, or rather the investors of course do get returns, but they have to, wait and watch. It is that long-term perspective kind of stock that we've often talked about when it comes to ITC. Well, let's also address market open. There you are, a little bit in the red, we would say. 0.1% down for the Nifty 50, but at those 22,900 levels still. So holding out, we would say, because yesterday as well we started a bit lower but managed to gain that momentum through trade. Sensex also continuing to trade over that 75,200 levels, but we are seeing some bit of pressure, about 130 odd points lower that we are on the Sensex. Let's also look at the other components. Your mid cap and small cap too are trading some bit of pressure, but rather we would say pretty much in tandem with the benchmarks at this point. The BSE small cap index there, flat trade but still managing to hold out, we would say. So both of them rather flat at this point, but mirroring the benchmarks. The Bank Nifty, now this one is what we wanted to see, really turn things around, or rather is the one that most of the components is what we're hoping would be the ones that start performing and pushing the indices higher. But the Bank Nifty there also under some bit of pressure. Nifty IT index as well, about 0.2% lower for that one. Let's look at the other components then, sectorally, which are the other sectors that are actually contributing. The IT index back in the red. Let's see what FMCG as well as the consumer baskets, those will be interesting. Pharma index also rather flat, we would say right now, the pharma index trading. Nifty FMCG, now this one will be interesting because if you have the likes of an ITC that put out its numbers, you have the likes of Honasa, consumers and others that form in the part of this basket that actually put out a good set of numbers, but you're still seeing the FMCG and consumer basket, both of them there, both of those indices down in the red. Metals, now that's quite an interesting one because that one has been holding out, in fact touching those 10,000 levels. We could say 0.5% of gains for the metal, and in fact we've been seeing quite interesting trade when it comes to the whole metal bit. Every alternate day is when we've been seeing them swing between gains and losses. Auto was the one of the top gainers in trade yesterday, but today almost 0.5% of losses coming in there for the Nifty. Auto index, realty as well succumbing under some pressure, so you have that one in the red as well. So just the metal index really holding out today, some bit of the pharma index as well in the red. Let's look at what are the contributors then on your screens, the gainers and losers that are making it to today's trade. On your gainers list, Adani Enterprise continues to be in that gainers list. Yesterday somewhere close to 6% odd gains. Hindalco ahead of its numbers is trading in the positive, as well as Axis Bank, and we were talking about a couple of components in the Bank Nifty that are actually holding out and stretching. So Axis Bank making it there. SBI 2 among your gainers. Bharti Airtel, NTPC another one ahead of its earnings. So both Hindalco and NTPC positive, surprisingly ahead of their earnings. Let's also look at the other ones. You have Divi's Lab, you also have Kotak Mahindra Bank and ONGC right now that are among your top gainers. Let's also look at the flip side, and your losers today is Shriram Finance. They're among your losers, almost 1.23% lower. Hero Motocorp also seeing some cuts, as well as Adani Ports. Now remember, yesterday Adani stock saw gains of anywhere close to 1 to 8%. Adani Ports also being one of them, but perhaps some profit booking that is taking place there. Tata Consumers, Coal India, as well as Apollo Hospitals among your other laggards in trade today. But quite interesting to see the picks that are actually making it to that, but most of the heavyweights continuing to be in your in your positive list. At least we're seeing the likes of an Axis Bank, SBI, all of them in the positive. Aamar, you want to come in? We were talking about banks and how we have to play a cautionary note at this point, but we are seeing the likes of an Axis Bank or even a Kotak Mahindra Bank there quite holding out quite strong. What is that bias now between the private and the PSU banks? How would one be playing that? What would be a safer bet?
See, amongst the private sector banks, Axis, ICICI, they definitely continue to remain strong and positive. Kotak Mahindra Bank, we've seen some regulatory concerns there. HDFC Bank also not being a very great performer. But HDFC Bank, what the best part is that it's around very crucial support zone, so it has corrected significantly. So that's the reason we're seeing some buying interest coming there. Amongst the PSU banks also, there's a lot of interest, and we can see that reflect in SBI and other PSU banks as well. So it's more of that banks are I would say portfolio or some stocks wherein one can definitely look at having a position, but at the same time one needs to remember that rather go in a staggered way than go all out, given that most of them are trading at record highs.
Right. Aamar, quickly, your view on Adani Enterprise. Now, there were reports that is likely to be included in that Sensex rebalancing that is to take place, and the stock we saw climbing anywhere close to 6% yesterday. Today, we are seeing Adani ports come under a bit of pressure. But, how is one to be looking at the Adani group of stocks? If it does get included, it will be among the first Adani group of stocks in the Sensex. So, what are the charts also saying for something like an Adani Enterprise as well as an Adani port?
Adani Enterprises, what we are seeing here is that the stock has significantly moved up from its recent close of 2,800. So the stock had made almost 2,760 on 10th of May. So that's not far off. And from there, the stock is up towards 3,400 level. So that's almost roughly around 20% rally which the stock has witnessed. Looking at the charts, technically, if you ask me, I would say that the stock could meet with some resistance around the current levels. So 3,350, 3,400, 3,450, that's the immediate zone of resistance. If the stock sustains above that level, then the stock could rally towards its earlier highs, which it had made of around 3,750, 3,800 levels. Because the structure of the stock from a long-term perspective has turned positive. So the stock needs to sustain above the current levels. That's very important for the stock for any significant upside. And talking about the other stock which you mentioned, Adani Ports. So if you look at Adani Ports, what we are seeing here is that the stock is very strong on the long-term charts, on the intermediate term trend as well. So this is one stock one should hold on to. One is having already invested in stocks. Fresh entry at the current levels, I would say be slightly cautious there.
Right. Let's also speak about ITC. We were talking about just before opening, and those numbers were quite positive. In fact, brokerages also coming out with good numbers. Aamar, quickly your view on ITC, because that's also a query that is coming in, especially after the results. Long-term perspective, what should be the targets and stop loss you would advise for this particular one?
See, ITC over the last few, I would say roughly around 8 to 10 months, the stock is really in for a consolidation, because the stock did make a low of almost 400 and as a high of almost 500 levels. So between 400 and 500, the stock is trading.
Sir,
if you ask me, the levels to look out for ITC, that is clearly on the upside. It's around 480, which needs to be watched out for. That's a zone of resistance. But the stock is looking positive on the charts. One very short-term zone of resistance is around 445 to 450. So that is the first level which the stock needs to reach. Sustaining above that level, we could witness a sharp rally in the stock.
Right, so that's the word on ITC. Another one that put out its numbers is Indigo. So let me take you through some of their numbers. Profits has seen a good spike of 106%, coming in at 1,894.8 crore rupees. Revenues too have grown by 26% at 17,825. This remembers the sixth quarter of profitability for Indigo, one would say. EBITDA AR has jumped by about 48.7%. So that's another positive, as well as the margins too have expanded to 24.8 versus just 20.9. Of course, there are brokerages that have come out with reports for it. Morgan Stanley continues to have an overweight call. They've increased their target price to about 5,142 versus the 4,615 that it was. They say any dip in the stock would be a good opportunity to buy. The company has also guided for a 10 to 12% growth, in the availability of seats per kilometer. So that's something that would be quite interesting for them to take on. There's also Invasset Investec that has put out a note on Indigo, maintain a whole call with a target price of 4,050. They do see this the earnings deceleration ahead, though. They do not anticipate any repeat of this kind of performance in FY25, given the substantial increase that they've already seen in the cash. Now, it will be interesting to see what Indigo, because it is among your biggest player there, but you also have news of other airlines that are quite vying and heavily trying to compete with what Indigo is doing. Amar, quickly, your view on the aviation space and also Indigo at this point, being the only one that is actually having this kind of positive momentum, 6 quarters in the green. What are the charts really saying about Indigo?
If you look at Indigo, it's just like the flight takes off at a very high altitude, the same way Indigo has also been performing exceedingly well on the chart side. Because if you look at on a yearly basis, this year till date, the stock is up by almost 50%, which is phenomenal. And also, as you rightly said, the stock has been witnessing a very sharp uptrend and momentum. And so this is from a long-term perspective. Definitely, the stock remains positive. There's no trend change. But at the current levels, I wouldn't recommend a fresh entry, because some of the technical indicators from a short-term perspective, they do reflect that overheating is happening in this particular stock, even on the intermediate-term trend. So those who are long, they can hold on to their positions. They can trail below 4,200 levels, but fresh entry at the current levels wouldn't be advised.
Well, so no fresh entry you're saying at this point, but you can hold on if you do have interglobe aviation. Well, let's also talk about the broader perspective of markets. And we did have Jefferies that came out with its greed and fear report. Now, what was interesting in their report is they say that if the China trade remains in focus and in the current levels, the way it is performing among the Asian markets, then that dedicated emerging market foreign investors may no longer want to be overweight on India. So they are showing quite a little bit of caution when it comes to India, and they're saying that maybe China may get that kind of fund flows that would otherwise come to India, at least till for the near to medium term. They do see private banks as well as IT, both those sectors that were owned by foreign investors, both of them having underperformed in the recent past, and we've been seeing that. But that that doesn't tend to mean that they do not want to own IT service companies. They go on to say, as well as private sector banks. They say that there is merit for investment in private sector banks, although for the value-oriented investor, they see they are approaching a level of valuation which makes it them little appear a bit interesting. So there could be some entry points when it comes to banks, but one would have to literally verify them and see whether they have that risk appetite. Now they're also saying that with the Modi government continuing, there could be any more positive difference, at least to ordinary people, is what the Modi government has done in the past 10 years, which could be a positive. And they are saying that any kind of repeat of the shocks where BJP was defeated back in 2004, that kind of sentiment remains quite unlikely. Now, the bigger risk, they say, is whether there are any changes in the capital gains tax that is looming if this government continues, and that could be something, and there is enough reason and more for such a proposal, as well as evidence from retail speculators, speculation that is going around saying that there could be some changes in that capital gains tax, and that is interesting to actually watch out for. Let's discuss or dissect this a little bit more, and joining me for that is Anirudh Garg. He is thank you so much, Anirudh, for joining us this morning and speaking with us. We were talking about how Jefferies has put out this note. Most of the markets have factored in the Modi government. Perhaps a majority or a change in that was the only reason where we could see some bit of flip-flops. Would you agree as well, or what would be that one standout factor you think that will actually get FIIs flocking towards the Indian markets now?
A very good morning, Stacy. Thank you for having me. I think that one factor that you're talking about is the Indian retail money that is coming in. This is a surprise for the FIIs for the last, I don't know how much time, because we have never seen such inflows from the Indian retail into the monthly SIPs and the mutual fund lump sums in a very long period of time. You can see there is a clear differentiation between what the FIIs are holding and what is performing in the market. So as you were rightly saying that FIIs have been primarily having positions in the IT sector and the private bank sector, the valuations of which are approaching in a considerable zone after a significant time and price correction over the last 2.5 years. So yes, I think the Indian retail money, which is flowing primarily towards domestic sectors, old economy sectors, and primarily capex, is leading the way for the Indian markets.
Right. Do you expect any major changes once the government comes in power? We were just talking about how even Jeffries thinks that there could be some change in terms of that capital gains tax. Could that be, could that maybe change things in terms of how the market inflows are also coming in?
Yeah, I think whenever we approach now, it is clear that the Modi government may come in. So I think the probability is on the side of the government coming, the current government continuing. And whenever we approach towards a budget, this discussion about the capital gains is always there. Yes, going forward into the future, I believe that there will be some hike in the capital gain. But yes, markets have a tendency to absorb such shocks from time to time. What worries the market more is the ambiguity about what the change would be rather than the actual change itself. So I hope that there is no such tweak in the capital gain. But yes, when we look at developed countries and other counterparts, the capital gains are more there. And India may follow such path in the future. But right now, I think rather than waiting for something which is a long shot, one should focus on what is actually happening in the country and what are the sectors which are focusing on the growth for the next 2 to 3 years.
Right. Let me quickly get in a couple of queries answered from, we actually in fact have hit that 23,000 levels there like we were talking about. So that peak, also that mount that we've, climbed in, we are hitting 23,000 levels there on your screens for the Nifty. So of course, that is something that we were anticipating, hoping, but of course the global trend wasn't showing, the GIFT Nifty also didn't show that much of indication that we would see that positive momentum. But of course we have touched that new high now of that psychological level clearly broken. Aamar, come in here, we are now at a new high, we can say this level also broken, and you did say that 23,100 or 23,200 would be those immediate resistance levels for the Nifty. Quickly your view on now how is one to be trading this? Does this seem too stretch for somebody who is looking to enter the index at this point?
Overall, I would say that looking at the trend and the overall broader sense, because if you look at the advance decline ratio, again, advances outnumber declines by almost 2:1. So that clearly tells me that there is a lot of definite interest there. And also, as we had spoken earlier of the index heavyweights, now almost all of them have turned green. I would say the major heavyweights I'm talking about, except TCS or ICICI Bank, TAD, it's slight in the red. So that tells me that this is broad-based, but we'll have to watch out for sustaining over the 23,000 levels. Bank Nifty needs to trade above the 49,000 levels. Then it could witness a sharp rally. HDFC Bank needs to trade above the 1530, 1550 mark for any major rally. So these are the levels one should look at. Definitely the biasness is in favor of the bulls. Right, still bias in favor of the bulls. Aamar, quickly let's answer a couple of queries now. One that is coming in from Rakesh wants to know the view on NTPC, especially ahead of its earnings. And in terms of power stocks, we've been seeing not in terms of their earnings at least not so good, but in terms of future outlook and demand of the summers now progressing, they do see that there could be enough and more positive momentum going ahead. So what would be your view on NTPC? Let's help Rakesh out here. So looking at NTPC continues to be very strong on the long-term charts. Intermediate term trend, we are seeing some sort of consolidation happening because the stock did make almost 380, a high of 380 recently. And then it did correct towards 345 levels. Currently it's around 373. So I would say that the stock is in for consolidation. The long-term trend remains positive. Intermediate and short-term trend is clearly pointing towards more of consolidation. So I would say 380, 385 on the upside and 345, 350 on the downside. That's the range for NTPC, and the results could be the next trigger. So ideally at the current levels, you should wait it out.
Right, so wait it out for NTPC. Let's also address another stock that we're seeing that could see some bit of action. There is Z Entertainment that has announced that from Color Max Entertainment as well as Bangla Entertainment, that that JV which from that from Sony, they have gone on to fail to comply to their obligations under the merger cooperation agreement, is what Z is claiming, and they consequently Z has terminated that MCA as well as called upon both of these companies to go on to pay a termination fee of close to $90 million. Now, this is according to that MCA terms that were signed in, and we perhaps could see, Z Entertainment as well, some bit of action on that particular stocks. Let's get in Aamar once again to give us his view on media stocks as a whole, and Z being that one component there that has seen quite a bit of swings. Of course, that stock continues to be in the F&O ban list, though it has seen in the cash market, it has seen some good action. So how is one to be viewing media stocks and particularly Z then?
See, media stocks, I would say it's more of specific stocks which are to be looked at, because I would say with the digital presence also going all around, so media stocks definitely have some sort of attraction and competition there. Looking at Z Entertainment, this stock has been, I would say, wealth destroyer. Really hasn't helped the investors at all. As recent as December, the stock was trading around 300 levels. It's trading 50% of that. It is witnessing some bounce back after all the negative news flows and the merger going off. So the stock has bounced back from almost 130 levels to 150. One could say that the recent low should act as a very strong bottom. On the upside, the stock needs to sustain above the 150, this current level, 150, 155 zone for any meaningful rally. Sustaining over the 155 zone, the stock could rally towards 175, 180 levels, because volumes we are seeing that have increased, and delivery quantity also has increased over the last few trading sessions.
Right. Anirudh, quickly your view then on telecom stocks. Now, what is interesting is that Vodafone today is among your top gainers. There is a news flow that is coming in from that particular counter. In fact, there's also brokerages like UBS has put out a note on the telecom sector as a whole. They've raised target prices for the likes of Vodafone from a neutral. They've raised the target price from to 18 from 13. So as for Bharti Airtel, and that one also has been someone that has been contributing to the index's gains as well. So that overall telecom sector right now has seen quite a bit of consolidation. One would say they believe that the pricing between 15 to 20% for they could see an increase in mobile prices in the coming 12 to 24 months. They also see this whole relief in terms of the AGR reduction by the Supreme Court to really go on to aid companies like Airtel as well as Vodafone. Do you think there is reason to be looking at these stocks now in this kind of market?
Absolutely, and I feel the maximum relative change. At Invasset, we focus on relative change. By relative change, we mean something that has happened in the past will translate into good numbers into the future. So I believe telecom sectors currently is one of those sectors where relative changes happen. The government has shown its intention that it will not let Vodafone Idea sink, and coming to the forefront, and I would say playing from the front foot. So yes, we believe that for Vodafone Idea, though it is not a recommendation to buy or sell, but we believe that the relative change is happening positively for telecom companies, especially Vodafone Idea. And as far as you were talking about the increase in the AGR, yes, we believe that AGR increase is now due, and I believe it will be within a year that we will see the increase of 15 to 20% in the AGR.
Right. Quickly back to Aamar then, and let's get 2-3 queries answered by him. Debu K is asking on SML, Isuzu as well as Bosch India. What should be the kind of trade one should look at for both of these counters?
So SML, Isuzu, I would say wouldn't recommend fresh entry. though the long-term trend remains extremely strong for the stock. So if anyone is long, one should look at booking profits. At the current level, I wouldn't recommend entry because the stock is witnessing some consolidation. And talking about the other stock which you mentioned, Bosch.
Yeah.
So again, this is one stock which is definitely very strong on the long-term charts. Intermediate term trend, we are seeing some sort of profit booking consolidation, has a similar structure of like SML Isuzu. So I would say again, not fresh entry recommended at the current levels.
Right, so no fresh entry for both SML Isuzu as well as Bosch India. Another quick query coming in on Max Health from the current market price to a 1 to 2 year perspective. What is the long-term view for this particular counter, Max Health?
Overall for Max Health, the long-term perspective is positive, but what we are seeing is the stock seems to have formed a top. If we go back and look at the stock, the stock had made a high of almost 910 levels in February, and then the stock is trading around 785 currently. So the long-term trend on the yearly charts, on the quarterly charts, that continues to remain strong and positive, but we are seeing some sort of consolidation in the stock happening. The level to watch out for on the downside is somewhere around 740, 730, 740. That's a zone where you can look at fresh entry if the stock is able to consolidate. If it trades below that level, then we could witness some further correction. So fresh entry again at the current levels is not advised.
So no fresh entry at current levels. Look for 740 odd levels, and maybe that could then be an entry point, or wait for more correction at those levels. Anirudh, quickly to you. We are standing at a point where Indian markets are hitting those all fresh highs, and so is what we've seen with almost 14 out of the 20 global markets as well. So what gives India that one factor that people would want to actually come in? We in fact just spoke about how the greed and fear report actually says that perhaps foreign investor money might go towards China if this continues, and they might not be as overweight on India. So in this kind of scenario, with our market still touching new highs, we still have one of those bigger factors in terms of the election results yet to come in, but we are not stopping in terms of where our markets are trending towards new highs. So how are you looking at, is there enough and more reason for people to be looking at India at this point, or do you think there could be corrections and one could come in post those corrections then?
Yeah, okay. So India currently is divided into two parts. The FIIs and the DIIs have clearly chosen their paths differently. So FIIs traditionally they focus on quality, and the quality sectors are pharmaceuticals, IT, FMCG, white goods and stuff like that. So we can see these sectors, these pockets totally underperforming. When it comes to the DIIs, I think they're more focused towards value, and particularly in this run, they're focusing on value. So you will see all capital goods and metals and all the old economy sectors doing pretty well. And what we are seeing today is that FIIs, somewhere I believe they have been caught up in being too much bearish about India. Look at the Nifty performance for the last 5-6 months. I think as an index, it's grossly underperformed year to date. And while the other counterparts, the broader indexes, the small caps and the mid caps have done pretty well. I think this trend should continue into the future as well. And I think it's the time has come where Nifty would also join the race because of the massive inflows that India is facing. Stacy, I would like to tell to investors that we are in a phase where the foreign money for India is not mattering much, owing to their I would say the biases that they hold towards the sectors they invest in. The growth story is changing primarily towards capex, and I think these sectors which focus on capex like railways, defense, and even the metals bottoming out at a very nice time. These are the sectors that one should focus on for the next 2 to 3 years.
Right. So metals, any stocks within the that are going to see a good capex plan from the companies as well as from the government side of things, those are the ones that you should be keeping on your radar, at least Anirudh is telling. Anirudh, is this what you're looking at Invasset? Is that what are your top 3 sectors that make it to your list then?
Yes. So we walk the talk. We are focusing more on the capex. So I think railways, defense, and other capex and capex oriented sectors like power, etc., and infrastructure hold importance for us. PSU banks, we believe, should do pretty well going forward. And metals, I think, have clearly bottomed out for the world as the inflation is subsiding, according to the Fed.
Right. So those are pretty much the themes that are playing out. When we speak to most of fund managers, that's where they are also looking to be parking their money. Well, we're completely out of time here, and markets, hoping that by the end of trade, we are going to stick on to those, high levels. The Nifty 50, they're just coming down that 23,000 peak, but hopefully will manage to gain some momentum through trade. Even the Sensex, for that matter, close to 75,500 levels there for both the indices. Even the broader markets also looking at some bit of gain. So that's where we stand off right now. Let me thank both my guests, Anirudh Garg as well as Aamar Deo Singh, for giving us their time, speaking with us and helping our viewers with their queries, as well as giving them perspective on how they should be trading going ahead in this markets that have hit an all-time fresh highs, we could say, and newer highs that we need to accomplish to the day. Well, it is the weekend coming in, so enjoy your weekend to both our guests as well as our viewers. A lot to be coming back to also come Monday morning, and we are getting closer to the last bit of the election phases. Delhi is going to be voting on Saturday, so we would urge all of our viewers from there to please go out and cast their votes. And of course, there's a lot more that they can catch up through the weekend. Well, with that, it's a wrap and a goodbye from all of us and the entire team that puts this piece together. Thanks so much for watching in. Do post us your feedback though in the comment section below, and follow us on the link at the bottom of your screen for all your other updates. Keep coming back to moneycontrol.com as well as the Money Control app.